And he goes, "So how much do you charge?" I was like, "Charge? Interesting. I didn't know I could charge for
Right,
this." So, right, but that's not the situation in India. That's not the
right.
situation in a lot of emerging markets. So money solves money problems. Well, duh. But to elaborate on that
Right.
a bit more, I think
Mhm.
investors being too pushy, too sharky, just throwing out equity, and he's
Right.
almost trying to catch you out, then don't go for it.
Hello, it's so nice having you on the show, Anmol. How's it going?
Yeah, very good, very good. Pleasure to be here. Thanks for having me today.
Yeah, it's amazing. I'm super excited to be talking about my favorite field, which is startups. So, yeah, tell us a bit about yourself and we'll get started.
Awesome. Yeah, startups and myself, right? So, funnily enough, I'm sure you hear it from everyone else. Like they always fall into this. I don't think anyone ever says, my
Right.
day one role was to get into startups. So, funnily enough, my background was very traditional. So, I started out in investment banking, started off at the ranks at JP Morgan as a infrastructure analyst at M&A, and then sort of transitioned into the risk and in wealth management side within Marsh McLennan, sitting under Marsh and Mercer. So looking at big pension fund risk and insurance funds and mutual funds risks. Exited out of large transaction there and moved into venture about 3 years ago. And
Mhm.
currently, I own and operate two venture vehicles. One is a venture studio and investment arm where we invest in pre-seed and seed stage software companies. And the second is a private venture incubator and a syndicate arm where we then work with sort of later seed stage to Series B startups, focusing on one sort of geographical expansion and
Right.
acceleration. So getting them soft landed into different geographies and attaining that market share. And the second part is when they're in sort of that pre-Series A, Series A, Series B rounds around sort of 2 million to 50 million. We have our own network of family offices that tend to come in and lead those rounds, and we will facilitate those or create the SPV and put stuff together for that. So that's in a very nutshell,
Right.
our role where we come in early and invest ourselves and then grow and accelerate and facilitate through the later stages.
That makes so much sense. And yeah, why did you specifically choose to get into this field of venture capital?
I think, I never really chose it. It almost sort of fell
It just
in my
happened.
lap. So yeah, so I'll tell you how I sort of got started, quote unquote, within this field. So whilst I was transitioning out of
Mhm.
M&A and going into the wealth management side, I had a few months gap. I was traveling across South America actually. So I was traveling across Brazil, Argentina, Chile, Paraguay, and I was just sitting in a hotel. And funnily enough, I was on Reddit. I'm a big Reddit user, and I think I was on r/entrepreneur or
Mhm.
one of the forums, and I just heard there was sort of a passage from someone asking for help, like I'm running a e-commerce jewelry business, and I'm having issues figuring out my pricing. I've got an investor I'm speaking to. I don't really know what terms, and he had a few questions, and I was like, I know the answers to these, so I just wrote a response. I was like, in terms of your pricing, you need to look at competitors, your demand, da da. Da. And on the valuation side and the equity side, make sure you don't do revenue split from early doors. If he's taking equity, consider this, this, and this. So I wrote him a paragraph, and he said thank you. And, didn't hear anything for a week, and then he came back and he was like, "Thank you so much. Like it worked out. He's going to put in like 50 grand, and this is what's
Mhm.
happening." And even on the market and price side, I've onboarded like 50 pre-sale customers. I was like, great. And he was like, now I have these one, two, three more questions. Can we get on a call and discuss? And I was like, sure. Here's me sitting in my hotel in Brazil, and he goes, so how much do you charge? I was like, charge? Interesting. I didn't know I could charge for
Right.
this. I very quickly go on Google and I see how much do investment advisors, venture advisors, how much do they charge? And it just said $50 an hour. So I said, $50 an hour, and he said, cool, give me 10 hours worth of consultations. So that was like my first entry into the completely unexpectedly.
Mhm.
And then from there on, I started working with these smaller e-commerce tech-based startups, very early doors. So this is 2022 we're talking. And from there on, the knowledge sort of grew, and then I started participating in more events, learning a bit more about how transactions were occurring on the smaller side. Because what we were doing on the wealth management side, these were transactions on the minimum side of at least 100 million. So there wasn't much
Mhm.
overlap. But as I, got to understand the venture market a bit better, work very closely with startups and understanding their issues with go-to-market, their challenges in going through these barriers, I got better and better. And then in these events, I would meet these angels who would say, "Look, this is what I'm looking for. This is what I'm looking for." I always ended up finding these startups who had these abilities who
Mhm.
could come in and focus on the exact points that these investors were looking at. So then I started facilitating these deals, and as that experience grew, and then I started working directly with VCs and larger tier syndicates, I realized that there were a lot of things that these guys weren't doing. Not to say they weren't doing right. They were missing out certain
Mhm.
aspects. There were gaps in the market that weren't being fulfilled, and then I started just plugging those up. It started from the venture advisory side, then moved on to syndication, then added the tech for equity side, and then now our own fund. And piece by piece, it just started to come
Right.
together. So that was the whole
Yeah,
version of how things are now.
that makes sense. We always kind of get into these things which end up becoming our identity later. We just get into those things very randomly in a way. And it's beautiful
Yeah.
for that to happen. Same case for me. I just got into design very abruptly and very randomly without even knowing about design. There was a video called Learn Typography, and it was like a 1 hour live stream. Just consumed
Hmm.
it, and I just got consumed in the field itself. Yeah, that's how the journey started. Very interesting. So the startup space, of course, is picking up in India, and that's the ecosystem I'm trying to help with this
Hmm.
conversation. And of course, I mean, everyone can learn from the same conversation as well. So something that comes to mind is this initial wave, or you can say it's kind of the second wave. So it's the young wave of young
Hmm.
founders, more branded startups, more in tech, more in new tech as well, AI, agri-tech, space tech as well. So that's great to see. But at the same time, I'll say there's a general push towards trying to get capital without much thought about it. Like trying to get capital to solve a problem. But I would want to know, have you seen what sorts of challenges do you think money solves best or should we raise for?
Hmm. I think that's a great question, right? What sorts of challenges does money solve? And I think money solves money problems, and people will be like, well, duh. But to elaborate on that
Right.
a bit more, I think startups nowadays, especially with the US way of thinking, and I think I know a decent bit about the Indian ecosystem, even though I'm based in the UK market, due to sort of my background, we're good in sort of touch. Um, I think the US mentality is very much like what we back ideas, and if the founders sort of seems they've got the motivation, we'll do it. But the reason it works there is just the pure volume of it, right? There's
Mhm.
so much money, there's so many entrepreneurs
Right.
that eventually, if you just it's the law of numbers. If you just throw enough money at it, something will ultimately work out, right? If there's like 10,000 of them, one will be a mega superstar. That's me,
Mhm.
and they have enough, they have 100,000 to throw at 10,000 each, right? But that's not the situation in India. That's not the
Right.
situation in a lot of emerging markets. So, in my opinion, the way we sort of go about it is I think in early stage, you should look for smart capital or strategic alliances, right? That's why the model we sort of have on our venture studio side is, tech investment and now sales
Mhm.
for equity model. So rather than us just giving you, when you have an MVP or, just post prototype, rather than just giving you cash and not being able to manage that, because that's what happens ultimately, right? If you're just launching, you have an MVP, you might have one or two sort of beta testers, and you're sort of figuring out, and someone throws $1 million in your
Right.
pocket. You've never seen money like this, and ultimately you then sometimes lose track without the proper guidance and handholding and involvement. And some might say, well, that's part of venture, right? If they're not able to handle it, then they shouldn't have it. And yes and no to a certain degree.
Mhm.
Certain point, you can play the devil's advocate on both sides. But I think in order to fulfill that to its max, I think in the early stage, you need the right handholding and partners to guide you to a point where you're churning enough revenue, let's say around 20, 25K a month, and you know how to make cash, you know how to generate free cash flow. After that, you can look for just that cash investment where you've understood your go-to market, you've understood your product, you understand what pivots have been needed to make, you understand what it takes to grow a team, you understand how to hire, and then you go for just looking for cash because now you just want to scale that. But in the early doors, look for strategic partnerships, look for tech equity, look for sales, and maybe then you can utilize some cash here and there to deploy on the key necessities. So I would say those are probably the way to go about it.
That makes sense. Yeah, that's very foundational as well to create the foundation very strong, because these partnerships will anyways keep helping you throughout the journey as well. Right? Makes sense.
Hmm.
Yeah. So another thing that helps the ecosystem is the lack of competition as well. But at the same time, it's like a small, the pie is not small, but it hasn't been enabled yet. And so it's lots of founders trying to do the same thing and kind of many of them failing at the same thing. So yeah, it's interesting. Judging by the competition, I would want to know, how do you advise startups to judge competition?
That's quite interesting. I think, the funniest thing we as investors sometimes hear is, when startup comes to us and say, there is no competition. And I say, okay, well,
Right.
yes, because there always is competition, right? No matter how unique of an idea, IP, whatever you've built in, if you go to an investor and he says, well, tell me about the market, who are your competitors? Maybe you've created something so innovative that there isn't one direct competitor, but there'll always be subsets, or in some vertical or horizontal
Right.
way, some sort of
Always,
competition
sometime, somehow,
existing.
right? And even if
Exactly,
you make a rocket that goes up and comes down, NASA anyways is making rockets. So right,
yeah.
how farther innovative can you go?
Exactly.
Right.
So there will always be something. And I think in terms of testing out competition, it's almost like peeling the onion layer, right? So the first layer is, the overarching world of Google and everything. So if I talk about, for example, one of the startups we invested in, I can give an example. So they're RPPG technology. They do a lot of facial scans to then give you your data on your heart rate, HRV, skin, to talk about, your burnout rate, right? So in terms of the app is focused towards mental health and preventing burnouts for founders. Now, is there a direct competitor doing exactly that? No, but there's companies like BetterHelp. So when you go onto Google, your first, overarching
Right.
layer of competition is who are the biggest tech mental health companies. Well, BetterHelp would be the first one. It's a $5 or $6 billion company who's sort of really scaled over the COVID period of tech integration. So that's your first bubble of competition, the one that everyone else knows about. Then you maybe go a bit deeper into details and try and figure out, okay, well, okay, that's a general tech company. They just are almost operating as a marketplace where people who need therapy and people who are therapists, and they're just adjoining that. And that's not what
Right.
we're doing in this company. So
Mhm.
next is, okay, well, which companies are using RPPG technology and doing facial scans? There are a few companies in the US, when you sort of go into it, they're doing treatment for skin cancers. They're doing, early stage diagnosis. Again, it doesn't link exactly into mental health, but there's still the same tech that's being used because
Mhm.
RPPG is an open source tech. And then
Right.
you dive a bit more into that. Then you go into, your acceleration programs, your incubator network, and your direct venture world, your VC portfolios, and then you start digging out of that. So you keep peeling the layer of onion one by one by one by one, and you'll start seeing where your market lies. And then you'll create your matrix, right? So you then use it to compare what the product similarity is, what the price similarity is, what market are they targeting, what is their USP, how much have they raised, and then using that bit by bit, you'll be able to better understand where your competition is, what your competition
Mhm.
is doing. In some cases, there'll be a direct match straight away to begin with,
Right.
right? Some people are creating, AI CRMs. Well, there's a billion of them out there. So
Right.
in those cases, you'll see them directly out there. But in the
Mhm.
cases where it's a bit more rare, you have to adjoin the verticals and the horizontals, in one, and then put together this matrix to see
Mhm.
how things stack up.
And that kind of will bring you towards finding your moat as well, you'll see, because
I think
it'll
definitely, and
right, it'll very much be
I'm glad.
needed in this
Yeah.
market to stand out. Right.
Yeah, and I'm glad you mentioned that actually. Not a lot of people think about that, right? And I think moat is a very, very significant thing, people should consider if they are looking for investment. Because ultimately how we judge the moat, we rank it from 0 to 1, zero being if I woke up tomorrow and I had
Mhm.
$1 million in my back pocket, how quickly can I run you out the market? Zero being impossible, one being, you're gone tomorrow, right? I can replicate this like this. So I think, yeah, ultimately moat is very, very significant. But what people don't understand is moat is not just the IP or the patent. When people think
Mhm.
of moat, they're like, well, I have a software company, I can't have a patent on it. That's fine. That's not the only thing that creates a moat. Your market can create a moat, your team can create a moat. There's different ways of
Mhm.
achieving that moat. Your moat could be
Right.
created by 10 different things, put
Mhm.
together
Mhm.
the size, the first mover advantage, the way you're curating something. You might be mixing three or four existing things into one, right? That can be a moat. So I think moat is super, super important. It's
Right.
definitely something
Tot-
we look out for and we
Mhm.
preface.
Yeah. I'm a brand strategist, and in our world, I think just because of so much of information and noise, these two words got conflated, which is moat and a differentiator. You can be
Hmm.
different from other brands in many ways. A Lakme and an Olay can be different, but do Lakme have a moat that Olay doesn't? I don't think so, right? So that's the point to me. The moat is something that safeguards you, as you mentioned, right? The 0 and 1, like
Yeah,
the probability. If you have $1 million, can you just replicate it and run you out of the market? Figuring
yeah,
that out is much more foundational, and yeah, a lot of people miss out on it because it's also very difficult. Creating a moat is
yeah.
not easy. Creating a differentiation itself becomes very jarring. So
Hmm.
yeah, but it's something to think about, and it helps, as you mentioned, from an investor perspective. I'm sure it just boosts up that confidence very fast, right?
Yeah, absolutely. Because look, ultimately, if someone is just going to be able to copy and paste what you have, right? And most of the time, it's going to be the companies who pre-exist in your market. These guys
Right.
who have no competition, their competitors are going to drive them out. Because especially
Mm.
guys, not even big guys who are just making 3 or 4 million in revenue. If they have an extra 500-600K to deploy right away, they'll do it. Right, if they see it's a potential or some
Mm.
substantial opportunity, they,
Right.
they will go for it. And where it comes to differentiation, I think people need to understand differentiation after a certain point becomes oversaturated.
Mm.
So you need to focus on solving the market and deriving the value more than differentiation, because how many different iterations can you have, right?
Right.
How many different ways can you spin the same
Mm.
makeup or spin the same AI bot? Or
Right.
ultimately they'll run out, right? And you'll
Mm.
start coming up with ideas where people will just be like, "What the hell is that?" Like you'll be doing differentiation for the
I've seen
sake of
such brands
differentiation,
that makes me say, "What
right?
the hell is that?" Yeah.
Exactly. I came across this company who was doing AI water, and I heard it and I was like, what? And they were like, yeah, well, we use AI to tell, your taste buds and according to your mood, what type of water you should. And I was like,
Yeah.
this is just BS. I mean, maybe,
Yeah.
some ultra high wealthy goof will be interested in using this, but general public, this is not a fit
Yeah.
at
The
all. And,
TAM is
and this is
five
what it
people.
yeah, and it seemed like to me someone had sort of told them about no, be different, be unique, and they just
Mhm.
went
Mhm.
completely onto the
Yeah.
opposite, side of the radar.
That makes sense. Another thing about competition, which, as you mentioned, right, those people who say they don't have competition, if your idea is that good and that great, and if you succeed, then you will have competition, right?
Yeah.
And you don't have a guarantee that they won't be better founders than you, just at the core.
Hmm.
And yeah, right. And or the other thing is maybe you don't have competition because it's not a great idea. So
Yeah.
validating that becomes very difficult.
Yeah. Yeah. No, look,
Mhm.
competition is good, and competition will always exist. And like you sort of said, if you're good enough, competition will just come and copy you.
Yeah.
Especially, when you're talking about emerging markets, right? We have a big example for China, right? Most people don't even file patents in China because they know as soon as the patent goes into China, copies
Mhm.
will start to emerge, right? That's and it's just how things are.
Yeah, can't help
So
it. Yeah.
yeah, it definitely is. Unless there's just a very high barrier to market, which the only
Mhm.
thing I have come across is aircraft and airlines,
Mhm.
right? Where the barrier to entry is you need to have a 50, 100 million in your back pocket, or it won't, right? We have a portfolio company currently where their LOIs, they're very early stage. Their LOIs are already at 300 million, and their overall cost of completing the build of the aircraft and launch and the first commercial flight, the cost of everything is about 900 million. But in there's very, I mean,
Yeah.
there's still competitors, but
Mhm.
Boeing can come in and start to shift. But
Right.
that's where you're like, there's maybe one or two in the whole world
Right.
that can
Right.
do what you do.
Along these lines, I was thinking you're an investor, so I'm sure you would have. I'm not sure that you would have a different opinion, but it'll be an interesting opinion, which is when would you advise startups to not take money? When should they go bootstrap?
That's quite interesting. I think it differs. So, I think that's a decision very much to startup needs to make. I think some of the time, I think I can tell you when they, shouldn't take money. And
Mhm.
the biggest thing is, when a investor is really pushing them in terms of
Mhm.
take my money, take my money, take my money, and that they have no need for that investor's service, they have no need for that investor's experience, they have no need for small amounts or extra amounts of capital. I think that's when they definitely shouldn't take it. But I think in terms of when they should take it, is to identify three different problems, right?
Mhm.
Every startup has three key challenges in terms of what disables them in getting to the
Right.
next stage. The
Mhm.
first challenge is knowledge, right? So that's when we earlier talked about strategic, investors coming in. So
Right.
knowledge of the industry, knowledge of the market, knowledge about the competitors, knowledge about, just the investor's been in the industry a lot longer. So he can, pretty much figure out those knowledge gaps and come on board as a smarter person. A lot of the times, roles such as those will be played by advisors, and
Mhm.
sometimes those advisors will come in with a small check and will say, "I'll
Right.
put 25 grand in, and I
Mhm.
also want an extra 1 or 2% equity."
Makes
I've
sense.
done that as an angel in one company where I was
Mhm.
like, "I know a lot about this industry. I'm putting in 5, 10K. I'm going to come
Mhm.
in." The second thing is resources.
Mhm.
So again, this is stuff like tech, sales, product dev, contracts, these sort of things where the investor has these resources, startups needs it in order to get to that next stage. Without this, it wouldn't facilitate. And then the third thing is what we sort of talked about, and I think this comes in at a later stage where it's literally just capital, but capital for the sake of capital, because the good old saying is you need money to make money ultimately. So, when you're really, really bootstrapping, you might get yourself up to $1 million in revenue, which, I mean, well done, first of all, but $1 million ultimately, when you look at it at a macro scale, is nothing, right? There's probably a million businesses doing $1 million ARR. So when you get to that stage, there's only so much more you can do. But in those
Mhm.
instances, you can pick up debt, right? Vanilla debt, I'm talking about, something maybe like 1% a month, where you know exactly how to operate your vehicle. So I would say if you have no challenges in knowledge, if you have no challenges in resources, and smart capital or capital for the sake of capital isn't really a big problem, and you feel like you can pick up debt and scale, then I would say don't look at investor capital. But
Mhm.
I would still say have those meetings, have those engagements with your supply partners, with your clientele, with your board, whatever, because sometimes, founders obliviously think they know it all and what they know is always right.
Right.
And maybe it is the case, but 95% of the time it isn't. So I would still say validate it, but if an investor
Mhm.
is being too pushy, too sharky, just throwing out equity and he's
Right.
almost trying to catch you out, then don't go for that on top of that.
Yeah. That's a great framework. It makes sense. Now, along those lines, if I'm a founder, if I want capital, then what are the things that I should have? Like basically, what do you see in a startup to invest in it?
Yeah. So we actually have a four quadrant approach, like in terms of how we look at startup on the very early side. The very first thing is their product itself, right? So that comes down to, what are they building? Does it logically make sense? Does it have a market need? Have they validated market demand? A gold toilet is great, but no one wants it, right? Or again, another
Five
AI
people.
CRM.
5 people. Time is five.
By people, yeah. Another AI CRM system. It's just not
Mhm.
needed in the market,
Right.
right? So first is product differentiation, speciality, product market fit. Have they understood that? The second thing is then understanding the market. Is the market growing? So, for example, cinema, the industry overall, or entertainment tech, it's a
Mhm.
very wobbly industry. We don't like to go into it. So, do we understand the market? Is the market on the rise? You mentioned space tech earlier on, and we're moving into digital space tech and digital deep tech quite a lot, because that market is growing very, very quickly. In
Mhm.
India, a big one is also fintech, right?
Right.
Payments, transactions, cross-border payments, wealth tech, insurance tech, legal tech. These markets are growing in some states more than 15% CAGR, right? Which is incremental. So what does the market look like? Where is the competition? Third thing is then moat, coming on to their defensibility. We always piece two things in. We say moat and traction into one,
Mhm.
where we want to see how defensible the product you have created and what sort of traction have you built out already. We're not of the US mindset of backing ideas. I think
Mhm.
ideas are great, but ultimately it's the execution that counts. So that's the third thing. And fourth thing, we almost put in 40 to 50% of weighting in this, and that's the team itself. How good is the team? What is the
Mhm.
background? Who
Mhm.
have they been able to attract, right? And actually, coming to your previous point of cash and raising, this is one thing we pay a lot of attention to. Who has come onto the team with payment and who have come to the team naturally, right? And what I mean by that is if you're paying someone 5, 10 grand a month, anyone's going to be infatuated by your idea and, will say yes, right? Blind will lead the blind for money.
Right. Right.
That's never been a case of disagreement. But who can you sell it to and give conviction to on the early doors when you have nothing to give but 5% equity, right? Which co-founders can you bring on board? Which advisors can you bring on board? And that's a
Mhm.
big
Mhm.
factor for us where, a solo founder just goes, oh, people just don't get my idea. And I'm like, maybe
Yeah.
your idea isn't to get, right? But,
Mhm.
if they've been able to attract a strong team, a strong CMO, a strong CPO, a strong CTO, and, 2 or 3 really renowned industry professionals who've come on board as an advisor and they've been able to do that with their own charm. I think that's a big giveaway in one, the founder itself. And, there's a good old saying in the investor industry that I will any day take a bang average product and a great
Mhm.
team over a great product and a bang average team.
Right. That's, I mean, that's kind of like a Bible. It makes sense.
Yeah, yeah. It's one of the proverbs to
Interesting.
live by.
Yeah. 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 And this is what I was coming to towards the end as well, which is you would have seen startups die as well. And
Hmm.
out of the ones who do, so you would say these, I mean, the quadrant kind of itself lends it to the fault lines or the mistakes that can happen, which can lead to those startups dying. Team has to be one of the biggest ones. Timing would be one, right?
Yeah,
PMF. Can you expand a bit on the PMF aspect as well?
yeah. So I think the biggest thing about, PMF is finding your right product market fit. And sometimes what founders do wrong is they think their first iteration is the right iteration, right? They'll come onto the market and they would have had this idea from, their postgraduate studies or, the first thing that they'll sort of blink
Right.
of an eye, their shower moment or whatever. And they think that is the right idea. I'm just not
Mhm.
doing it right. I'm just not doing it right. And
Mhm.
some of them, and I think some of them have great ideas. They just will lack the execution or the ability to pivot. Understanding when and how you need to pivot is super, super important. And if you just listen to the client, if you just listen to the market will give you all of the answers. Ultimately, right, if you are speaking with your clients regularly enough on early basis, they will tell you what is working, what isn't working. And as long as you're able to listen into that, as long as you're able to adapt your solutions, as long as you're able to convey the right things to them, you will find your product market fit. Maybe it will require 1 or 2 iterations to pivot. Maybe and your first will never be your last. That's never been the case. You can look at big tech giants like Facebook, right? And we can take Facebook for an example, right? It was meant to be this inter-chat schooling system, and now the biggest revenue for Facebook is Facebook ad generation. It's a
Right.
data gathering system on top of, people think it's a social media network. Yes, it is, but the biggest revenue generation, the biggest data collection and allocation of it is it gathers data, and it runs the ability for others to run ads and make revenue off that. That's how Facebook made, I think over 30 billion in
Yeah,
in
similarly with
in
Amazon as well, right?
free
They
cash
make
flow.
so much money with their server business.
Yeah, yeah, yeah.
Yeah.
It's almost a tech company at this
Hmm.
point. That's why they're
Hmm.
reinvesting so much into it. So
Right.
I think finding the product market fit is ultimately one, listening to your customers, right? Your customers are literally going to tell you, right? If in the early doors you sit with them, you ask them, right, what is going right? What do you need? How can we improve? If you really listen to them and providing value. Second, listen to the market. Your market will
Mhm.
always tell you where the gaps are and where you can pivot, right? If you closely watch your competition, if you closely watch the trend in the industry, you will ultimately be able to figure out where the holes are and where things are dropping off and where you need to sort of add value. And just be, don't be too rigid is what I would say. Be open. And we saw this with a lot of the AI, boom coming in. Every now and then there's gonna be this tsunamis of tech explosions or
Mhm.
catalysts, let's call them, which will come and overall change the emerging market or the scene of the market as we know it, right? And we saw this during the 2008, 2009 crash. We saw this in the internet bubble, 91, 92, and then we saw this with the tech bubble, and also somewhat in the middle during the blockchain bubble, where
Mhm.
these
Mhm.
things will come in, and if you don't adapt fast enough, you'll almost be brushed out of the market. So you can't
Right.
be so rigid. And I mean, unless you're $1 billion company, then that's fine. But if we're talking on the startup
Mhm.
stage, you can't be too
Right.
rigid that you're not able to move along with trends. And as long as you're able to do that,
Mhm. Mhm.
you'll have a strong product market fit. You'll be able to pivot and you'll stay into the market long enough.
Right. Majority of the pivots are basically just polishes. It's not even pivoting directly. You're just trying to figure out what works, what iteration of the product works, what features are redundant. And then if you, let's say, take out three features and you can literally see a vision for a different product itself. So you go there. And if the market says that that's what we want, then you just sell that, you just give it to them. So yeah, makes sense. And
Yeah.
yeah, man, this was such a helpful conversation and also implementable as well. I'm sure it would have been helpful for people. Amazing. Thanks for doing this.
No, I appreciate you having me, and yeah, I definitely hope it was helpful for someone listening. And
It was.
if anyone has any questions or does want to sort of get in touch, my
Yes.
LinkedIn is always open. It is flooded, but it's always open.
Awesome. All links in description, guys. Hope you had a wonderful time learning. Take care. See you.